Trading with technical analysis but still losing money or feeling inconsistent? Well, stick with me because in this video, I'll show you the most important component of my entire technical strategy. If I could only use one thing for the rest of my trading life, it would be a naked chart with just the candles searching for supply and demand zone. Now, in this video, we're deep diving into supply and demand zones, which of course are the single most important part of my technical analysis. This is the foundation that I build everything else on. You'll learn exactly how I identify strong zones, how I mark them, where I take trades, and why price action on a clean chart tells me more than any fancy indicator ever could. Everything else, indicators, oscillators, moving averages, those are basically training wheels. Most indicators are lagging, meaning they tell you where price has already been and not necessarily where it's going next. And worst of all, it can get quite cluttered. It can cause analysis paralysis and get confusing really quick. But on the flip side, the candlesticks on a naked chart tell you everything you need to know about price action and the real probabilities. And the most important thing on that naked chart, supply and demand zones. So here's how I approach it every single day, guys. I look for strong supply and demand zones and mark them with clean rectangles. These are the big areas where big banks and institutions left unfilled order potential. Price is constantly searching for unfilled orders on all the time frames. And the higher the time frame, the more important those orders usually are, because that's where the smart money operates. Now guys, I typically only buy in the bottom third of the overall curve and sell in the top third of the overall curve. I map out what's called curve analysis by looking at the most prominent and recent swing highs and lows on higher time frames, and then divide that range into 3 equal parts, just like you see here on this chart. So here's exactly how I find strong supply and demand zones on a chart. First thing I do is I look for a small collection of basing candles, which does represent a tight consolidation area. So then I look for a strong move out of that basing area, and this typically creates what's called an acceleration gap, just showing that in this example, supply heavily exceeded demand, and that's where you get this strong gap to the downside. Now, when you do this exercise, you'll notice there can be many potential zones on a chart, but in general, the closer the zone is to a major swing high or swing low, the better. Those are usually the highest probability areas because that's where the biggest imbalances tend to happen. I only trade fresh supply and demand zones, the ones that still have strong unfilled order potential. Most people call them fair value gaps, but I prefer the term acceleration gap. The bigger the gap, the better. It shows where demand heavily exceeded supply or vice versa, creating a massive imbalance. I don't buy or sell inside of the gap itself, guys. I wait for the price to come back to the zone on the other side where the true unfilled order potential is. The closer the zone is to the swing high or low, the better. And this goes back to the very first thing that we all learned in trading. Buy low, sell high. Banks love to attack these big imbalances right near those major swing points. So this is the most important anatomy of a good zone. I pay close attention to 2 important things when price reaches a zone. How fast did price leave the zone the last time? The first leg out candle must also show a clear acceleration gap and preferably give at least 2 to 3 strong candles out. The faster and stronger it left, the more powerful the zone usually is. And how much time did price spend in the zone is the second question. The strongest and highest quality zones usually contain just 1 to 3 basing candles max. I'll still trade them with up to 5 basing candles, but 6 or more is a no-go. The less time price spends consolidating in the zone, the better. That usually means there just wasn't enough time for a major institution or big bank to fully accumulate or distribute their orders before the supply-demand imbalance became too great, forcing price to gap away. I like to see the retracement leg slow down just before bouncing, guys. This often creates what's called a liquidity sweep just ahead of the zone. Now, this is part of what I call the master path, which is an actionable way to view Wyckoff style behavior and use it as a tool. And I'll dive into more of that in a couple videos from now, since it's an important topic all on its own. But banks can't just drop one giant order like I mentioned earlier. They would get a terrible fill if they did. So they have to layer them in smartly. And if you're finding this series valuable so far, please do hit that subscribe button and turn on notifications. It's the best way we can keep producing these in-depth videos for you for free. So remember, at the end of the day, trading supply and demand zones is all about unfilled orders. Price searches for them constantly across all time frames. However, the higher the time frame, the more accurate it becomes, since we are riding the coattails of the big boys on Wall Street. The smaller time frames usually mean that you are trading more with the retail traders than you are with the banks. Supply and demand is the core of my technical game. Without strong zones aligned with my fundamentals and sentiment, I simply don't trade no matter how pretty the rest of the chart looks. This approach keeps my trading simple, high probability, and focused on what actually matters. And it's the biggest reason that my technical analysis works consistently for me. So if you're still watching this, you're already ahead of most traders. Now, in the next few videos, we'll cover more technical analysis, more of the sexy stuff that we see as far as the pretty lines and colors. This is where we do finally time our entries once we've got that strong fundamental reason and sentiment confirmation I laid out in videos 2 and 3. We'll start getting into more odds enhancers that build upon each other for a more complete technical picture. Naked charts are great, but it's these odds enhancers that act as filters and really tie it all together for us. So if this series is helping you, once again, please do subscribe, turn on the bell, and drop a like if you're enjoying this. And comment below, what's one thing you learned about with supply and demand today? Trade smart, trade with strong zone, and I'll catch you in the next video. Let's go.